Trader, and I'm here to remind you to be good. Am I good? I'm going to get out of debt and achieve your financial dreams. One thing I wanted to talk about this morning was building a strategy. I know I've touched on this a few times, but I've always gone through it very quickly. So I wanted to take a little bit more time and go through it. There are 7 points to strategy. Number one is watch the videos at www.reallifetrading.com. And the second is to create the trading plan, which is described in the videos. Now, everyone has their own personality, their own available time, their own, everyone's unique, and you've got your own traits that make different parts of trading appeal to you, different patterns appeal to you, different candle formations, and everyone needs to create their own plan. Now, if you're a veteran trader, you probably already have programmed into your mind, and you just recognize entries, exits, stops, targets, and all that kind of stuff subconsciously because you've been trading so long. If you are a beginner trader, it's probably all looks like a bunch of mumbo jumbo, confusing stuff. And so, based on your level of experience, you can do step 3. And step 3 talks about where you boost your trading plan by writing out what your entry criteria is, where you'd put your stop order, how can you calculate your position size, and where you would put your target. Now, I am working on a new strategy, or I'm about to start working on a new strategy. So I'm going to write down what all this stuff is. Jeremy Newsom has already put some of the entry criteria, where to put your stop, how to calculate your position size, where to put your target in the free video. So if you like some of those strategies that he has, go ahead and write it out on your trading plan, what sort of entries you're looking for, where you'd put your stop, but write out some rules for yourself, and then you can go down to step 4 and start looking for it. Now, what I mean by looking for it is you can pull up, let's say this is Killing Pharmaceuticals, but just go through and grab some of these charts and just scroll through, and maybe you're looking for a bullish gap out of a consolidation pattern. Actually, my new strategy is going to deal with gaps out of consolidation patterns. So here is a consolidation pattern, just a sideways move, and there is a gap out of it. So my entry would be, you look for a gap out of a 6-week or longer consolidation period. You would put your entry as if you were doing a retest or a gap and go. Now, guys, I'm going to talk through this, but I have not yet tested this. I have no idea if it would work. You set your stop in the gap, and then you set your target, your first target at 2R, and then the rest of your target, the rest of your shares, you just trail the stop at the low of each day. So in this one, my entry would be probably somewhere in the middle of this box. My stop would be here in the gap. And then if I trailed my stop, I would either get out somewhere up here, which is probably about 2R, or maybe even all the way up here on this day, depending on where I finally got stopped out. At any rate, I need to write that criteria, but you scroll back in these charts and you look for your entry criteria, and you kind of write out, executing your plan, what would have happened. And you want to do that 10 or 20 times, look at it, see if you want to make any tweaks. Then maybe you want to make some of those tweaks and start taking the data again. But by the time you finish step 4, oops, wrong one. By the time you finish step 4 here, you want to have at least 100 back tests where you write out your entry, where your stop would be, your target, and your criteria for adjusting your stop as the trade progresses, how you would manage the trade, and then make note of the results. So you should have 100 data points. You should have 100 examples of where your strategy worked or where it failed. And by fail, I guess I mean you end up losing 1R and no more. But yeah, so you've got 100 data points. Then you go on, if you like step 4 and you have a decent win-loss ratio, and when you win, you clearly win more than when you lose, and over those 100 back tests, those 100 trades that you mapped out, overall it's a significant winner. Then you're ready to start trading it. And the first thing you want to do is you want to train your eyes you want to develop a skill on finding the entry criteria, and that you would do at least another 100, but 1,000 is really when you're going to really train yourself. So I see this gap here, but it's not really a gap out of a consolidation period, so I'd keep going. This is the whole point of the 1,000 gap and go challenge. This gap absolutely is a gap out of a consolidation period, so that's one. This one doesn't look like it's a gap too much out of the consolidation period. Well, it kind of is based on this pivot over here. So that would be 2. So as you can see, this doesn't have to take forever. I've done 2 in less than a minute here. It will take a time. It may take you 4 weeks, but you're developing a strategy. You're developing a skill that'll last you for the rest of your life and change your trading. So find at least 100, but preferably 1,000 entries, and that'll train your brain to do it. It'll make it kind of like muscle memory. You'll just be able to do it whenever you need to. Then step 6 is follow your trading plan virtually for 3 months or 50 trades. This means log into your broker, and when you see your criteria for the first time, you know, maybe I think Costco is doing this morning. When you first see your criteria, then you can execute your trade. Well, I guess I need a candle first. But if Costco were to gap up in here, let's say, that might be where I start writing down numbers and I go to my broker and I practice trading the strategy with my broker. So I would do that for at least 50 trades or 3 months, and then look at it. Probably for me, I really like a lot of data. I may do that even longer, depending on how significant it's winning. If it's only like a 50-50 win-loss ratio and the total number of R's, maybe just 1 or 2 R's on the wins and 1 R on the loss, I may do more than 50 trades. But the point is, by the time you get to step 7, which is where you're trading with real money, you have at least 100 trades that you've written down. You've looked at least another 100 with your eyes, preferably 1,000. Then you've traded it virtually, actually clicking the buttons and typing in your position size and actually having to move your order. So by the time you get to doing it with real money, you've done this 150, 250, 1,200 times maybe by doing the strategy. So by this time, you should know if 3 A, B, C, D, and E are going to work for you. So when you do get into the trade, you should be ruled so much less by your emotions. There should be much less greed, much less fear, much less hope, and more on logic for your trading, because you've done it so many times by the time you get to real money. And one consideration is when you do get to real money, maybe start off with a small amount. So if you have maybe $10,000 in your account, maybe just dedicate $1,000 to this strategy, or just maybe 2,000 or 2,500 or whatever you want to do, but you may portion off a very small amount of money to do it with real money for the first 3 to 5 months or the first 50 trades, and then go ahead, if it's still successful, blow it up into full scale. But this is how I develop new strategies. This is how you make it easier to stick to your plan. And again, the whole point of this is do it over and over and over and over again, so that by the time you get to the point where you are going to trade your new strategy with real money, you've tested it, you've proven to yourself that you can actually do it virtually with a broker, and you have the confidence to enter this strategy and execute it successfully. Okay, I'm going to turn off recording, but this is Brad Reed again, and trade on logic, not on hope.